Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Paul Abrahimzadeh on the line, and this is part of our iConnections New York Global Alts coverage, where we bring you the best of those that attended and participated in iConnections, which took place in New York. Paul is a partner over at 1789 Capital. Paul, welcome to the show.
Thanks, Adam. Great to connect.
All right, Paul. So excited to get into 1789 Capital and talk a little bit more about what you're focused on and what sector 1789 is focusing on and why. But before we do that, iConnections New York, Global Alts. Give me some of the backstory. Have you been to an iConnections event in the past? Is this the first? Like, what's the connection to the organization? Let's start there.
The first time I was invited by Natalia at Bloomberg TV and was invited to speak with her on a panel. Really to share perspective on SpaceX, given it was topical. It was the week of pricing. And given our position at 1789 as one of the emerging growth equity managers and real estate development funds in the country, they wanted to hear our perspective on alts, given the platform at iConnection, but specifically to talk about the IPO of SpaceX.
Yeah. Wow. What an IPO that was. I bet that was a busy week for you. Yeah.
It was busy. A lot of inbounds from the press, and rightly so. The market's never seen an IPO of that scale, both in terms of the size of the company, the size of the offering, and I think it was executed flawlessly. Hats off to the bankers that brought that deal to market. A lot of important judgments and decisions made around structuring and valuation and distribution that clearly hit the nail on the head. So it was a 10 out of 10 from our standpoint in terms of the way that was executed.
Amazing. Let's get into 1789 Capital. Maybe start off, tell us a little bit more about the firm.
Happy to. We are a SEC registered investment firm. We are named after the year of the Bill of Rights. So our core thesis is rooted in American exceptionalism, specifically funding the next chapter of American growth, prosperity, and security through economic development. We are investing in the best segments of the economy that we think can exponentially lead to greater economic growth in the United States. We started with a growth equity fund. That's our flagship product. It was launched a couple of years ago. And that fund experienced meaningful tailwinds in the period of 2025 through 2026, both in terms of asset growth, but also deployment, where we've gone from $200 million of AUM at the start of last year to $2.4 billion, and that growth equity fund was closed December 31st. We've increased the number of our portfolio companies from 5 to roughly 40, and the objective is to invest in industry leaders in the growth equity market with some occasional early stage bets across venture capital, and whether it's AI across the model layer, apps layer, chips, infrastructure, or segments like aerospace and defense and broader defense tech, as well as next-gen software. We're picking industry leaders that we think are within a couple of years of an exit, whether that's the IPO market or M&A. So that's the basic thesis. We also launched a real estate development fund, which will be closing soon. And that's a Sunbelt-focused strategy across 7 asset classes.
What do you attribute some of the success of 1789 Capital to so quickly, like being able to attract assets and growth? Like what do you attribute some of that to?
I think it's a few factors. One is timing, and we had a thesis that we were well timed. You've got a number of vintages in the venture capital and growth equity market that are long in the tooth, that have been managing positions for a decade or more, with very little or no DPI. And we felt it was the right time to double down and deploy capital ahead of an expectation that you see a reopening of the IPO window for technology companies. And that's clearly happening with SpaceX and Anthropic and OpenAI, Cerebras. We also thought that you'd see a material pickup in exits through the M&A market by unicorns in the Valley. And you had some early signals of that going back a year or two ago with Google Wiz, Meta Scale AI, and that's really picked up. You've seen bigger deals, or I'd say notable deals, with some of the high-profile unicorns like Cursor selling to SpaceX. We have a thesis that with a number of these monoliths and tech and mega caps going public, and now you've got Anthropic and OpenAI in the immediate backlog. You're going to have a public currency. These companies will be highly acquisitive to augment their platforms and build out new skill sets that they may not have organically. And that's going to be meaningful for our portfolio exits. You're going to see an increase in M&A in the valley that will benefit a lot of these smaller and more medium-sized unicorns. So we thought we had the right timing to deploy capital, and that's being proven right by Grok, which sold to NVIDIA, which was a portfolio company, Cerebras, which went public last month, and now SpaceX, where we invested in 8 tranches of SpaceX, XAI, and X. So 5 monetizations already in the past 6 months. The timing was right, number one. Number two, we felt that we had a different story to tell. I think a lot of the dollars are green, obviously, in the Valley and on Wall Street. And we have a team that's got over 125 years of Wall Street experience, plus decades of experience in Silicon Valley, analyzing technology companies. And we still felt that we were in the early innings of this AI build out. And so we were able to get in front of companies across each of the subsectors within AI and deploy capital in industry leaders that we felt were early in their trajectory to grow into $1 billion, in some cases, $7 billion market caps, potentially more. So I think timing has a lot to do with it and being at the right place in the cycle. And it was very difficult when I joined at the start of 2025, at the beginning of Q2. We were in front of investors pitching our thesis, but the common report was, you're a first-time fund. And we did not really have a track record. But what happened was, as we raised money each quarter and started deploying in industry leaders, people could see the embedded alpha in the portfolio. And so when people looked in the portfolio and saw SpaceX and XAI and X, they saw companies like Databricks and Ramp and Deal and Plaid, high flyers like a Polymarket or Cerebras, Grok, Anduril, Hadrian. That collection of logos, all of which were direct on cap table, really led to investor enthusiasm about the portfolio and attracted more capital.
So looking at present day, so I'll throw a timestamp on this for us. So recording June 23rd, 2026. Which sectors is 1789 focusing on and why?
So we've gone pretty deep on AI, and that's because it's such a large sector. It encompasses everything from the foundation model, like XAI or reflection in the open weight space. It includes the chip players like Grok and Cerebras, as well as related subsectors like silicon photonics with IR labs, with chip interconnects. And then you've also got the application layer, companies like Replit, vibe coding for the masses, which is our one and only bet thus far in the application layer, although we have exposure to cursors through the SpaceX investment following their acquisition. And then you get digital infrastructure with companies like Crusoe. So AI is the massive addressable market, and we've done everything possible to try and pick what we believe are the winners across each of those verticals. We were an early investor in defense tech when it was not in vogue. So if you think back to the fund origins, when we started deploying capital as a team in 2024, predating my joining the firm, the team had a great early call on the need to modernize American warfare, really to protect the security of the country against the threat of foreign actors, in particular, the potential Chinese World War 2.0 threat that we saw emerging. At the time, most asset managers on Wall Street and many in the Valley were still hyper-focused on ESG, which was, in many cases, anti-defense tech. And so we were early backers of that thesis. We've got hallmarks in the portfolio, like an Anduril, where we were one of the only new investors in Series G at $28 billion last year. Companies like Hadrian, where we've invested multiple rounds. And then a number of other emerging players that are doing an incredible job with verticals in defense tech, whether that's Chaos, Saildrone, Firehawk, and then space. Space is becoming increasingly intertwined with defense tech, given the need for greater satellite technology, drone jamming technology. So we've invested in companies like K2 Space, for example, within that vertical as well, beyond SpaceX. So those represent our biggest exposures from a portfolio standpoint, and a sector vertical. I would also say that next-gen software and really looking at software companies that have enduring characteristics secular tailwinds that are benefiting from AI, not threatened by AI. So whether it's Databricks in data analytics and the orchestration layer, whether it's Deal in HR software and payroll, Ramp in expense management and Office of the CFO software, Plaid and KYC software, and interconnects between banks, fintech, and crypto exchanges, and Polymarket and prediction markets. We've really picked those companies because we recognize those KPIs are very hard to match and they're exceptional relative to their public comps. We also make a big point about taking the IP that we garner from all the work and research we do on each company and applying that to what we believe are the emerging players in the vertical. So, for example, we backed Databricks in 2 rounds. We have the utmost respect for Ali Ghodsi and the team there and what they've built. But we then look at the next emerging player like a ClickHouse and invested in their most recent round, seeing a lot of corollaries between the KPIs for ClickHouse, their product market fit and expansion relative to somebody like Databricks that is more established. So that gives you some sense for how we're looking at things. We will also look at sectors I would say are earlier stage from a KPI standpoint, but are tied into the same themes. What I mean by that is we've looked at companies in the nuclear space, given the power grid deficit as a result of AI. We've looked at things like rare earth and invested in Vulcan Elements, given the clear decoupled supply chain from China in light of the current paradigm geopolitically. So that's a very high level overview of the way that we look at the sector allocation.
Paul, this has been great having you on today, man, and learning more about your background, what you're doing at 1789 Capital, and also obviously the background heading over to iConnections. That being said, Paul, if somebody wants to learn more about 1789, how do people follow up? How do they connect?
So the best thing would be to go either through our website, through our Twitter X handle, or on LinkedIn. We've also got a head of capital formation and investor relations, Dane Fraser, who's available as well, and he can be found on any of those handles, and he's happy to follow up and engage.
Fantastic. For everybody listening, just so you know, we'll definitely put some links in the show notes so that you can head on right over and connect. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. You heard me correct. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way on your journey as well. So hit that subscribe or follow. And Paul, thanks again for coming on the show.